Welcome back to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Ahu Yildirmaz. She is the co-head of the ADP Research Institute, and we are here for our monthly hit on jobs and wages. Be sure to stay tuned on the first Monday of every month for a complete review. Ahu, thank you very much for kicking off this series with us. At MarketSite, tell us a bit more about the ADP Research Institute.
Yeah, thank you for having me. At ADP, we pay 1 in 5 of the U.S. workers. What it means, it translates it to more than 24 million employee database. So with that, at the Institute, we have access to one of the largest actual employment data, which really enables us to provide insights into the marketplace, to policymakers, as well as the businesses to make better decisions.
All right, so and just last week you issued the ADP National Employment Report for January 2018, and the jobs numbers, the employment report, they were aligned. They were quite good, in fact. What does this mean for the current state of the U.S. labor market?
We have a great momentum in U.S. workforce. The labor markets are tight. And when we look at the past couple of years on a consistent basis, U.S. economy is adding more than 200,000 jobs per month. As you said, in January, we just released our numbers from the ADP National Employment Report, 234,000 jobs added in the economy. And what is really different, and this momentum is really unique because we see the jobs are coming from all sectors and all regions. It's a broad-based job gains. If you look at a couple of years ago, we had few struggling sectors like manufacturing and energy. Now we also see those sectors adding jobs with the energy prices coming back, as well as the global economy definitely helping to the manufacturers.
Are there any other big surprises that you're seeing in the data right now?
Yes, so as you can imagine, when you have access to this large actual data, and this is a unique data because it's a dynamic data. We have it's a weekly, monthly, quarterly data that we see, gives us the ability to see all the movements in the workplace. So we have the ability to capture the workers' movements, which jobs they go, and the premium that they are able to gain. So when we look at this data, we see that the turnover is increasing. The switching rates, when the employees switch jobs from one firm to another, which we call switching rates, is around 17%. I'm sorry, 27%, which is the very high number. And this is really an indicator of the labor markets being tight. And another data from our institute also shows that more than 2/3 of the employees are either actively or are open to look for a job. So given this, we see in our data that the employers are willing to pay premium to really bring the talent, the worker that they need. We know that the average wages are around 2 to 2.5% on a yearly basis, but we're seeing particularly in some industries like professional services, information, and healthcare, we see that the switchers enjoying a premium, which is around 6% wage increases when they switch from one job to another.
So this tight labor market's great if you're an employee job. It's almost like a buyer's market for employees.
It is.
Right.
It is. It's really tight.
And then to wrap up, what else is on your radar? What trends are you looking at for 2018?
Well, the wages especially, definitely. But another thing is that the labor shortage. Given this increased switching rates and the turnover, we see that the employers will have challenge to find the workers and the talent that they need to run their businesses. So it's definitely labor shortage, especially again in the high-skilled areas where the healthcare, professional services, those sectors. That's something that we are watching.
All right. Well, thank you very much for joining us at MarketSite. And traders, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.